Okay, let's dive right into this. Today, we are mapping out the ultimate hero's journey of capital. We're going to look at the 8 distinct levels of investing, tracing how the rules of the game completely flip on their head as your wealth scales from a simple, basic deposit all the way to absolute market-moving power.
So, here is our map for today. We'll be gamifying this journey, taking our first steps, compounding wealth, unlocking private markets, executing the professional pivot, directing capital at scale, and finally, becoming the market itself.
Part 1. Taking the first steps. This is the absolute foundation of our journey. And honestly, the biggest hurdle here isn't the math, it's really just overcoming that initial gut-level emotional reaction when you see those red and green numbers flashing on a screen for the very first time.
It usually begins right here at level 1 with something like $500. Now, sure, that's literal pocket change to Wall Street, but to you, it matters deeply. You open your first account. The numbers are flying around, but the real aha moment is realizing you aren't just buying a price tag on a chart. You're actually buying a tiny but very real piece of a business.
Now, what's really interesting about this slide is the contrast when you leap to level 2. It's all about structure. An absolute beginner, they just react to prices. They hold on tight and kind of hope for the best. But a true retail investor shifts from that random, reactive approach to a solid, structured habit. You stop guessing, and you start purposefully building.
In practice, you might set up automatic monthly contributions, and suddenly, your portfolio takes real shape. We're talking maybe 60% equities, 20% ETFs, and 20% cash. This is the exact moment you learn what diversification actually means. It's not just grabbing a random handful of stocks, it's about owning assets that behave completely differently under the exact same market conditions.
And your ultimate defense mechanism here? Dollar cost averaging. You're investing consistently every single month, totally ignoring those short-term market drops. Because at this level, you learn a massive truth. Volatility isn't risk. Selling at the absolute worst time is risk. By automating the whole shebang, you take timing out of the equation and just let the system work.
Section 2. Compounding and optimizing wealth. As your accounts grow, the focus heavily shifts from just throwing money into the market to actively managing how it grows as the stakes get significantly higher.
Welcome to Level 3, the consistent investor. Say your portfolio crosses the $100,000 mark. Suddenly, a 1% move isn't just some abstract concept anymore. It's $1,000. A solid year can easily add 8 to 12 grand to your net worth without you lifting a single finger. For the very first time, those returns feel incredibly real, and you start really grasping the power of compounding.
At this point, your strategy evolves into something much more rigid. You target a strict mix, let's say 70% equities, 20% fixed income, and 10% alternatives, and you become ruthlessly disciplined about it. You rebalance strictly based on those percentages alone. Equities soar, you trim them back. They drop, you buy more. Emotion is literally kicked out of the driver's seat. Then, as your portfolio crosses that $250,000 to $1 million threshold, you hit level 4, the advanced investor. We're shifting from simply managing investments to actively optimizing wealth. Think about it. A mere 2% improvement now means $5,000 to $20,000 in extra cash a year. At this stage, those tiny percentage tweaks make an undeniable difference to your lifestyle. So, you implement a really advanced system. You're constantly adjusting asset exposure, optimizing your taxes, and strictly evaluating downside risk. Your core philosophy totally flips. Instead of asking, hey, how much can I make? You start asking, okay, what is the exact probability of loss here, and just how big could it be? A prime weapon in this phase is tax loss harvesting. That means strategically selling assets at a loss to offset your capital gains. High-level investors use tactics exactly like this to build a bulletproof system. Because let's face it, as your capital grows, legally shielding your money from taxes and avoiding massive losses becomes just as absolutely crucial as generating those returns in the first place. Section 3. Entering the private markets. Let's move to and see how this builds, because this is a huge turning point where the public stock markets are no longer the only playground available to you. You hit level 5, the high net worth investor, officially crossing $1 million in investable assets. And suddenly, the velvet rope lifts. The financial system literally starts treating you differently. You don't have to go out and find opportunities anymore. They are pitched directly to you. Your capital has just qualified you for an entirely new tier of access. But with new access comes a brand new metric, the internal rate of return, or IRR.
You're looking at private equity, venture deals, maybe real estate. The catch? Your money might be completely illiquid. We're talking locked in a vault for 5 to 10 years. You're trading your liquidity for the potential of massive outperformance. The challenge here is no longer about getting access, it's about making the right selection.
Section 4. The professional pivot. This is where you completely transition from just an individual trying to grow wealth to someone operating exactly like a dedicated portfolio manager.
Enter level 6, $10 million. At this massive scale, a mere 5% swing is $500,000. Consistency matters so much more than hitting home runs. You might even formalize the whole setup into a family office to manage the taxes, the reporting, the complex allocations. You are definitely not comparing yourself to your neighbor anymore. You are tracking your performance against absolute heavyweight benchmarks like the S&P 500.
Section 5. Directing capital at scale. We are now officially entering the sweeping, highly authoritative realm of true institutional wealth.
At level 7, you are an institutional investor. You are literally deploying hundreds of millions of dollars through hedge funds and private equity managers. Because of the sheer mass of your portfolio, you can't just click sell on an app without moving the entire market price against yourself. It's exactly like trying to steer a giant cargo ship. Liquidity becomes this highly strategic game of chess that you have to plan out over quarters, or actually, scratch that, sometimes even years.
Part 6. Becoming the market. This is the ultimate climax of the journey, the realization of absolute scale and impact.
Level 8. $1 billion. So the crucial point is, at this tier, the rules flip completely upside down. The great irony here is that you actually stop thinking in terms of widely diversified portfolios and you go right back to highly concentrated positions. A totally standard move at this level is deploying hundreds of millions of dollars into a single idea, a single company, or a single strategy.
You aren't just buying passive shares anymore. You are taking absolute control. You're buying ownership stakes that literally dictate how a company operates. Deals are negotiated behind closed doors in private rooms. When you move this kind of capital, you aren't just placing a bet on the future. You are actively deciding which companies live, which sectors shrink, and which entirely new industries get to exist in the first place.
It really all boils down to this. You are not reacting to the market. The market reacts to you. At this billionaire level, it's about sheer, undeniable influence. Your personal decisions shape real-world outcomes far, far beyond your own portfolio. You have effectively and entirely completed the hero's journey of capital.
So keep building, keep structuring your habits, and keep your focus firmly on the long game. Which leaves us with one final provocative question to ask yourself today as you reflect on this entire explainer. What level are you currently playing at?